Hello, everybody. Welcome to my live stream. This is day number, I believe it's day number 8. Um, let me, I need to reprint the results. I just saw that I'm revealing. I cuss out Claude sometimes. That's hilarious. Can you give me the results we talked about for our last coin flip challenge in a WPF window? It was closed. So we had our results from yesterday. And you know what? I did a bunch of trading yesterday, so I forgot what the coin flip challenge even did. Let me find out here. I told Claude what it did. I reported the results and gave him snapshots. Is it in the marketing? No, I think it's in the main. Oh, okay. I'm I'm asking on the wrong thing. Let me go ahead and do the coin flip tracker. Can you launch day 8 WPF window for the results? Sorry, I'm not prepped up here. I had a little problem. I had a Windows restart, and I'm kind of new to all of this live streaming stuff. So OBS didn't have my microphone connected, and I'm kind of unfamiliar with how to use it. So I didn't really, it took me a little while, and I was rushing around to get started because I'm 7 or 8 minutes late. But so this is our current situation. This 140 is the eval and the funded challenge. So what has happened is during the coin flip challenge, we passed an eval and we got within one trade of a funded account. Sorry, not a funded account, a payout. And yesterday we actually lost that trade, if I remember correctly. Hedge P&L, yes. So we gained on our live hedge and we lost on our prop account on the day 8 results. So let's look at the available. That's my live account for today's results. I've hidden the uh, the display name the column. Is that a column? Yeah, so that you can't see my actual. And I'm looking for, here it is. So this coupling here is, so we're at 51,164. So I need to bet the maximum. I need to trade the maximum 50 or 1800. So that would bring me to 52.9. So 52.9. So that will be just fine. So let's do that. So we're going to launch TradeBlade. We are going to set our profit target to our maximum, which is 1800. That's by design because Apex Trader funding requires a 50% maximum amount for the consistency rule. Since we're going for $3,600 on the account to get to the maximum payout, we need to cut that in half, and that's our maximum. So we're at 1800 is what we can profit with today. That would bring us to 52.9. So we're going to go ahead with that right now. There's no risk in doing 1800. If we fail here, we will fail mostly fail the account, and we'll just cycle through to the next eval. That'll get us another $400, and that'll kind of be the worst case scenario for our coin flip challenge. But let's see what happens. What we do is let's start up TradeBlade. Go to Tools, TradeBlade Command Center.
Welcome to TradeBlade.
We'll just hit Start Trading. If you're new, take the tutorial. It's an audio guided tour from Carol, the voice that you just heard on the welcome. So we're going to add a pair, and this is how this works. We trade pairs. We trade NQMNQ, we trade ESMES, YMMYM, that sort of thing. And we set our primary account to our prop account. This is the account assigned to us from Apex when we buy an eval. This is our evaluation account, essentially, or our funded account, depending on what phase we're in. We set that to the primary account, hit next. We set the hedge account to our live cash account. Now, I made this mistake yesterday. This is actually my real live cash account. So I I had to fix that. You'll see that if you saw yesterday's live stream, it's all there. So we're gonna just do a direct entry, NQMNQ. This is a standard window. This is the entire trading session essentially set by default. When you get on here, you can change these values to trade during any times you would like. Helps keep you accountable if you're over trading during times you shouldn't. Now, since we are in our funded stage and we've reached 1800, I know that we're below 1800 now. So 1800 would be 51.8. We're below that now, but we did reach 1800. So we always trade with 4 contracts when we reach 1800, and we trade 4 contracts. These are our 4 hedge contracts on our live cash account. We always trade those 4 until the evaluation cycle or funded cycle is done. Until we either blow the account, well, actually, until we blow the account, it's always 4 once we hit 1800. Once you figure out the rules and so forth for how we do this, you'll see it's fairly straightforward and easy to remember. There's arbitrary numbers like 1800 that were derived from rules that we needed to accommodate. So there's our $1,800 profit target. We're going to have a $1,000 stop loss. That's our daily loss limit. We always take 1 trade per account. We either hit the profit or we hit the loss, and we're done on that account for today. So now we're going to actually, we're going to launch the pair card. We're going to arm it. It will not trade unless it's armed. That's a safety feature for you.
Pairing card armed.
Now then, we're going to go ahead and, sorry for the big Hey, I'm trying to get better at speaking. So this is a random number generator from 1 to 2. I was using a different one a couple of days ago, but now it doesn't work, so I don't know. But we're going to hit spin here. If it's a 1, we're going to go long on our prop account. If it's a 2, we'll go short on our prop account. And this is your prop entry buttons. Buy prop account, sell prop account, or long prop account, short prop account. The hedge account is actually going to automatically take the reverse side of that. So let's go ahead and do it. Let's find out. Is it long or short today? So it's long. Okay. I mean, that's a little bit more entertaining than the other one. So we're going long here. So I don't even know what's happening in the market right now. I can see actually when these pair cards have live data feeds. So you have your own little chart here, but you can open a regular live chart. I'll just demonstrate this now. So there's your live chart. We're at our lows. What were we going? What was it? 1. So we're going long. Let's go long. We'll go long now.
Hedge short filled on MNQ. Prop long filled on NQ. Fully hedged.
Okay. I'm satisfied. So I used market orders on both of them, market and market. You can use some different, there's some, so there's 4 modes. This is the original mode. It launched a market order and then a market order on the prop and a limit order at the same price we are filled at. So we're attempting to get the same price on both instruments. Sometimes you won't get filled. And really the only way you can't make money with TradeBlade that I'm aware of, unless you make human errors, and I have done that, like not trading the right number of contracts during the phase that you're in. These are important, and if you forget or you miscalculate, so you just it's not like you have to have a math degree to do any of this, but you do have to be mindful of some details. So the entry is by default manual and then a limit for the prop account. But to ensure you absolutely get filled, you can run market orders on both of them. And if you look under the positions, we can see how badly we ate the spread. So this is about 5 ticks. I mean, I can live with it. If it was always 5 ticks, I would just always use markets, because 5 ticks is basically it's 225, right? 50 cents a tick on NQ. So it's 225, and we're going for a $100 profit target. So it's a small, it's 2.25% of our total. It's an annoyance, but if we don't get filled, we can lose $100 we would have otherwise captured. Typically, what happens if you don't get filled is, you'll fill on the long for your prop account, and your short for your hedges don't fill, and you're already heading into hedge profit. Your prop account is losing, and you never got in on the entry, and so that entire $100, or sometimes it's up to $400, depending on how many contracts we're hedging with. So it can be substantial. It's not money you actually lost, but it's money you should have won. So anyway, okay, so this more or less bounced off. We saw a previous day low was right there. So this more or less bounced off this, and I'm not a big technical analysis guy. I like when I see price extend in one direction for a prolonged period of time, I do look for pullbacks. That's kind of, in other words, if price is going down, 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 I try to time it on the prop account, so I short the lows so that my hedge account can capture the bounce. I'm trying to make money on the real live money account and just use the prop accounts for insurance. Occasionally we get a payout, and it covers our hedge, our live cash accounts losses. And that's the beauty of this. It's almost like trading a live account with training wheels. With and I'm not ashamed. I don't care. Hey, if it makes money, call it training wheels. I don't care. But essentially, it's like trading your live account with no real way to lose. Well, okay. So the system itself can't lose. The only thing is if you make little errors, like you forget that you should be using 4 contracts and not 2, that can cause problems for you. So that can lower your EV if you forget things like that. So anyway, so we are long here, which means, so here's the situation. If we, and this is the dilemma, guys, and I'm going to bring this up to our math page here. Let me set this to the current prices. It's 45 for the eval cost right now, and it's 120 for the PA activation. So they're kind of they're squeezing us a little bit on our profits. This should be 157. It's 152. This should be like 89. It's or this should be 91. It's 111 because of the extra $20 for the PA activation. So anyway, so here's the dilemma I wanted to talk to you about: scenario 2 and scenario 3. Which is better? Okay, so listen. The eval is where the money is made. This is the bread and butter right here. You can fail an eval in 2 days and collect 152, which for a 2K account, or actually 1,600 is the max that you, or the minimum you need. So you're roughly making 10% in 2 days on your account. That's huge. Now all we got to do is scale and run 2 at a time, 3 at a time, up to 20 at a time. So this turns out to be, yeah, it looks small right here, but this turns out to be big money once you scale. Here's the situation. We have scenario 2 and scenario 3. Scenario 2 can be turned in about 4 trading days. So we can fail an eval in, on average, 4 trading days, as quickly as 2, and it can be longer, but about 4 trading days is what we came up with when we ran a Monte Carlo data set over this. So sorry, I'm having a difficult time talking. This is kind of new for me, actually, talking into a microphone. It's very foreign. I don't do it, so I probably have some ums in there and maybe get off topic a bit. But here's the dilemma with scenario 2 and scenario 3. If I go ahead and fail scenario and do scenario 2 and fail the funded account, fail the PA is a performance account, but this is your funded account. If I fail that, I can get right back to where the money is right away. If I go to scenario 3, yes, it has a weighted EV of $80, so it is worth it, but this doesn't count that there's a 2-week, up to 2-week with Apex wait for your payout. So this is a 5-week process, and your money is tied up because you had to cover the hedge losses on the eval win. So just like you make $200 if you fail an eval, if you pass the eval, you lose 300 because it's 3K and you're doing one, in this case MES. I'm doing MNQ right now, but 1 micro will get 10% of this figure. So you'll lose $300. Now you can recover that money back during you can't recover all of it back here, but look at the weighted EV, it's $31. That's because it only occurs 29% of the time. This occurs 60% of the time, and that's why it's $91. The problem with this is the payout weight. This has almost as good a weighted EV as scenario 1 if you got paid out right away, but you do have to tack on 2 more days onto this. So anyway, I don't know which one you would think is better. Right now, I am trying to fail the funded and use this only as a sort of, if I can't fail it, we do get to a payout, but my money is tied up for multiple weeks. So keep that in mind. All right, we are close to, this would be failing this. So if this fails here, then we will actually have failed the PA. We'll collect another $400. You'll see here. We'll collect, this will gross out at about $400 minus the $8 in commissions for the 4 contracts. So would be nice if this went ahead and failed now, so I could end the stream. But if you have any questions, please contact me. The best thing to do is leave a comment and send me an email. Leave me a comment that you sent me an email. I noticed somebody tried to send me an email and it ended up in spam. He sent me a comment saying, check email. I checked the email and found it. So if you're trying to get a hold of me, it's at support@tradebladehq.com. And yeah, go ahead, ask me any questions. This is very exciting stuff. I mean, to be honest, if I ran across this, if I ran across this when I was first trading, there's no way I would understand it. I would not even know how good this is. I would have no frame of reference. But if you happen to have a little bit of experience and you think through this problem and you're honest, if you're honest that, listen, the markets are essentially random. I can't say they're 100% random because that's not true, but they're essentially random. And the expertise is in waiting for those moments that aren't random. And so that means you're not trading a lot. And when you're not trading a lot, you're not getting experience on which ones aren't going to be so random. So it's this learning how to trade is like this push pull between the fact you should not be trading. Intraday traders make money when they don't trade every day. Typically, there are some examples where that's not true, but let's not use the survivor. Let's look at the 95% of what happens to traders, not the 5% that to win. And then they may win only for a short time, and then they give all the money back, which happens, dude. Sorry for the dude, but happens all the time. It happens all the time. So TradeBlade is the one system that it never gives the money back, except in this scenario, and this is more or less a worst case. Okay, this minus 111 is kind of a worst case. So we're bringing in some rare instances that will change this from a plus 400 to less, plus 377, because there are some circumstances that are rare that we can't engineer out. We are going to have to eat some lack of. There's a little end of day ratchet that occurs between 1800 and 2100. So if you're at 51,800 and getting to 52,100, at 52,100, the 2K end of day drawdown stops. So up until that point, you can't capture between 1,800 and 2,100. There's $300 in there that you can't capture, and so that's 40%. So that's $120 of the 800 you occasionally can't capture. Now, I know I said all of that, and it's confusing, and your eyes may be glowing. Just understand I have thought through all of this, all of it. If you can actually break this, if you can say, oh, this math doesn't actually work, you would be doing me an enormous favor. I'd almost love to give you $1,000 reward if you could break this. I'm not going to, but if you could break this, I would bet you cannot, because I've spent weeks and months trying to break this model, and it won't break. So the only thing that can happen is these prop firms, which are very competitive with each other, if they somehow change their rules to make this not viable, there's a couple things they could do. They could move you to live, which would completely end you on hedging with that company. At least with Apex, for example, for roughly a year. If you fail your live capital, you're iced out for a year. So there's things like that that could happen. They could move you to live. They could lower their consistency rule. Like Apex has a 50% consistency rule on their funded challenge. It's a 1-day pass on their eval. That's perfect for us, because 1-day pass on eval means we can get around the end of day drawdown, which will naturally lower the probability of passing. So we eliminate that with the 1-day pass, and now we know the barrier math, or what's called gambler's ruin equation. We know that with a 3K profit target and a $2,000 below the account end of day drawdown, we know the barrier math there is 40%. That's a given. So if you're performing less than or greater than 40%, you're actually so with us, we want to fail more. We would prefer, when I first started this, we wanted this to be at 10%, because that's where all the money is. Look what happens when it's 10%. Your weighted EV goes to 136. Your scenario net is $8. $8 is your only losing situation, and you make very little on the eval, or on the payout. You make very little. But it's you can't do that with you have to have edge in order to get below 40% pass. We're trying to fail them. So the barrier mass says you're going to pass 40%. That might be a surprise to you. It was to me. It was a big surprise to me. So anyway, this thing is kind of bouncing around. We're hoping this thing it doesn't matter. I would have loved to have gotten to a payout for you on a coin flip, but what this will do is simply roll us into a new eval. So that's what we're going to do. And you know what? Since we passed our first eval right away, basically the rule for the coin flip challenge, this is how I run it. I keep a stack of queued evals ready to go. And the only thing preventing me from running the evals is the fact that for this 2K challenge, you only have, if you're starting with 2K, you only have enough to handle one eval cycle. So you have enough to cover your hedging, which is to get to the worst case scenario for drawdown is 1,080 and then 300 plus minus 300. So that's almost $1,400, and you pay your eval fee and your PA activation fee out of a different account, not out of your investment money. But I've included that here since that is a part of the cost. So I guess the point is we really only have enough money for one eval, one funded challenge to cover the hedge losses in case we get to a payout. So, and then when we get that payout, we more or less break even. We recover the money that we laid out there. And then our second payout, which is our bonus, which I call our bonus round. If you run a second payout with no hedge, you only win if you hit the, $1,500 again. If you fail from there, you make nothing. So what we do is we hedge with 4 contracts so that if we win, we win the 1,500, but we laid out $600 in hedge money that we lost. So we net out 900. And if we blow it from there, instead of getting the payout, we blow the account, we capture $800. So either way, we're up on average about 861, depending on the outcome of the payout situation. So we automatically make this somewhere between $800 and $900. So this makes the scenario profitable no matter what. It's a brilliant way to handle this situation. So anyway, I don't know what's going to happen here, guys. I'm going to go ahead and stop the stream. This may end up going up here. We'll continue the coin flip challenge tomorrow. And listen, this should not make money flipping a coin, right? Strategies have exact fills they need, exact technical analysis. We need to know we need to predict which direction the market's going. TradeBlade is saying, no, we actually can flip a coin and still make money either way, no matter what happens. And that's what I'm proving out here, guys. So anyway, thank you so much for watching the stream. If you want more information, you can find it here at TradeBladeHQ.com. You've got your homepage. We have the Try the Interactive demo. Check this out real quick.
Welcome to TradeBlade. Hi, I am Carol, your TradeBlade voice guide. I will walk you through every step and explain each feature as you go. To turn off these voice tips at any time, click the Voice Tips button at the top of the screen. Look for the blue Add Pair button in the top right corner of the screen and click it to get started.
So we'll go ahead and click it. We're going to add a trading pair.
The Setup wizard is open. You will see a drop-down in the center of the panel. That is your primary account selector. Click it and choose your prop firm account from the list. When you have selected it, click the blue Next button at the bottom right. Now choose your hedge account. Click the drop-down and pick a different account.
Sorry, Carol was talking about our live account that just that just finished up. Okay, so we had an NQ stop, which means we have a blown funded challenge, I believe. That's what that means. Let me find out. So to actually blow it, we're short 58 bucks, which is about $20. We'll just consider that blown. We'll add the additional $20 into the mix, I guess. We don't even really have to. I'll add it in there. I mean, it doesn't matter, but typically I would trade it one more day and, trade it all the way down to 50,100, which would be zero. And so 58 bucks, it's 580 times 4. 580 each one. So in each one, each contract is a $2 commission. You're not making any real money. We'll just call that done. So we're at 389 here, which is 1894. This is kind of the worst case scenario. We got above 52,100 on this account, which means about 120 of this was not captured. So this should have been more about break even, a little bit ahead. We're going to just roll with it. But let me go ahead and I'll report this to Claude. We'll have the whole thing done for tomorrow for the results of this. But you can see what happened. We captured $389 on the live hedge account. So this would be your live cash account, and we basically lost our funded account. So we're going to start a new eval tomorrow. I'll have the results up there for you. And thank you so much for watching, and have a wonderful day. If you have any questions, send me an email again, or at support@tradebladehq.com, or you can just talk to me on the comments, because that helps my channel, and I automatically see your comments. So thank you so much, guys. Have a wonderful day. Good luck.